Hi, everyone. Hope you're doing fine today. This is part two in terms of my life before and after velocity banking. In the previous videos in part one, I was simply looking at how I have used credit card debt or credit cards and the principles of velocity banking to reduce my debt. Now I was able to achieve a home equity line of credit, which is another example of a line of credit, and I'm using that to further reduce my debt at a larger scale. So the home equity line of credit will kick in. It's already started, but I'll be able to really put money in and use checks from it to reduce my debt starting July the 17th or a little after when I receive the checks. So in general, I'm now combining all of the income that I receive from investments and my W-2 to do velocity banking now that I have a larger line of credit to pay off and to address debt issues. So my W-2 income for my job every day will be simply $3,390. That would be on a monthly basis, bi-weekly. Divided in half, so I bring home about 1690 every 2 weeks. Rental income, after pay the bills and everything, that leaves about $2,000, I think, available to pay off additional debt. My expenses, which include the rental income mortgages that I'm carrying, because I'm still carrying two, I was able to pay off one using velocity banking within 2 months. My expenses total 4,499. From previous videos, they average about 3,000 a month. Now that I'm including everything that I have to deal with, student loan, mortgages, regular expenses, I'm now pushing it to the max of what I owe in general. So from that, I have a cash flow of $891. Now, again, the expenses are average because some things will be higher, some things will be lower. But I'm starting off with probably looking at an average monthly expenses. I could be precise every month, but that'll be a little bit more detailed than for the videos and be a little bit more time consuming. So just an average. Um, the HELOC itself at 50,500 that I have on one of my investment properties will cost me $14.14 per day, starting off at 50,500. But I plan to take my income of W-2 3390 and my investment income of 2,000, which totals 5,390, and place inside of the HELOC starting in August. Now, this is going to happen every 2 weeks because I don't get paid on the 1st. I don't get paid necessarily on the 15th. It's just throughout the month. So at a minimum, with those two incomes going into the HELOC, my daily balance would be about 45,110. Now, again, this is just an average. Some things can happen. So I'm just looking at what I expect to do for the first month of August. What I won't do, and what you may have seen on other velocity banking videos, is pay my expenses out of the month of August. What I am doing is placing all of my expenses on the Navy Federal card and making sure that the expenses are paid by the 4th of the month. So this is on a statement cycle, I think, of maybe the 1st of the month through the 3rd of each month. Okay, so to the 3rd of each month. And what I'm gonna use a credit card for is also to write convenience checks off of the credit card and then pay that credit card in full before the end of the month to try to avoid interest. Now, I may pay some interest because I'm using the convenience checks in this instance, but there are other ways to write checks to reduce interest altogether, and I'm still working on learning those ways. I've done it before where you have a empty account. I write a check and then it pulls from that account and places what's the difference onto a credit card. And that was in the previous videos, but until I can fully learn that strategy and use it in a better way, just simply using the convenience checks from one credit card to get everything all in one place and then pay it off in full. Now, with me placing, again, my income into the HELOC and having a daily balance of 45.10 on average, then I will be doing or paying $12.63 a day. And that would be $391.63. So this here is the rate per day, 14.14, that I would be paying if I did not use velocity banking to pay off my debt. But if I use velocity banking and drop in my income, drop in my passive income, investment income, then I will approximately be paying $391.63 for the month of August at $12.63 a day. Now, these dollar amounts are much higher than what I was paying for my debt in general. But that was fixed costs, fixed rates. Now I'm using simple interest rates. And as I pay down this HELOC, the interest will continue to fall till it gets to a point where what I was paying in other interest rates will be definitely a positive in terms of this. This HELOC is 10.25%. Now, this rate is based on me getting a HELOC on an investment property. Now, if I would have been living in one of my investment properties, then this rate would be much lower. So if you own a home, a HELOC rate should typically be lower because it's your primary residence and you live in it. Because it's a business property that I'm using, it's an investment property, it's a secondary home, I'm paying a higher interest rate. So if you were carrying the same amount of debt that I was carrying and you took out a HELOC or a line of credit, then you'll be able to pay off your debt even faster in general. Some of the challenges with the HELOC strategy, also with the velocity banking strategy, is just your mindset. There's a risk if you lose your job and you've taken out an HELOC on your home, you can lose your home. But you can also lose your home by just having a straight mortgage. And if you don't make the payment, then you lose the home. And looking at some recent data, mortgage foreclosure rates are up, credit card rates are up. So definitely look at some strategies to reduce your debt. Again, I've started the the velocity banking journey by using lines of credit, particularly revolving credit card. Now, beginning in July, I'm really stepping it up and using a larger line of credit. This is opportunities to reduce your debt. It's a risk just like anything else in terms of a mortgage. Some of it involves you definitely having a budget, seeing your priorities, and being able to control your spending to try to pay down your debt. As long as you're working for someone and you're really not bringing in extra income or passive income, life is a risk. When a business or is not really making money, rather you're an investment, you're an attorney, you're a doctor for someone, labor is the most expensive aspect of any business in general. So you're always at risk. It's a matter of how you are mitigating the risk that you have. So thank you very much for stopping by and checking out the videos. Please hit the like button, the subscribe button, and just tell others about it. I love to work with you, your family, or groups in terms of understanding velocity banking. I see it as the potential to bring back billions, if not trillions of dollars back into various communities as it is used in practice. Very easy, very simple, but you definitely gotta consider the risk that are involved. All right, well, thank you very much for stopping by. You have a great day.